Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Teaching Tech Tuesday. Let's talk about trading versus sitting. If this is your first cycle or you're a newer trader, you're probably losing your mind because there's not a lot of opportunities seemingly out there unless you go way down the risk spectrum and you're trading sort of intraday meme coinery. For most of us on the first page of CoinMarketCap, on BTC, ETH, and Solana, there isn't too much to do, hasn't been too much to do. And for a lot of people, that's going to drive them insane. Most people can't actively be looking at the chart and not finding something to do or doing something. And that's where they just lose money over and over again. Instead of waiting for your favorite pitch, your favorite setup, your favorite catalyst, your favorite breakout trade, your forcing trades, your over trading. So let's talk about that today. First, a few quotes from a few individuals who've been trading longer than I have. Jesse Livermore, probably the most famous in regards to trading versus sitting quotes. Money is made by sitting, not trading. It was never my thinking that made me big money. It was always sitting. The desire for constant action, irrespective of underlying conditions, is responsible for many losses in Wall Street, even among the professionals who feel that they must take home some money every day as though they were working for regular wages. And man, that is huge insight. Again, for a lot of people who think, if I'm not trading every day, if I'm not making X money per day, per week, this isn't going to work out. That's not what this is about. This is not a regular job. You will not get regular wages. There will not be regular cadence of a paycheck. That's not how this works, at least for most people. Much of the time, there is a flurry of trade opportunities, and then there's a bunch of nothing. Unless you're going broadly, like I sort of have into TradFi, different times in the market will see different sectors having tradable opportunities. Sometimes it'll be commodities. Sometimes it'll be Forex. Sometimes it'll be crypto. Sometimes it'll be tech. Sometimes it'll be low caps. That's why I think it's definitely important to have accounts and money in places ready to go for those opportunities. But that doesn't mean you should be forcing trades all over the place with some sort of expected outcome. I'll go over my trades that I've made over the past few months in a second. A lot of people always ask me, how many trades do you take? How many trades do you make in a day? I make like 3 trades a month, probably on average. It's really not about the number of trades. It's about being here, putting in the reps, understanding what you like and don't like. That's what the technical analysis is all about. It's finding your favorite setup using your favorite system and hopefully losing less money than you make. That's what it's all about. There's really nothing else. Another quote, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Most people absolutely cannot sit in winners. I've talked about this before. They are just allergic to sitting in a winner for any period of time. The moment they are in profit, they, instead of adding to a position, have to quickly close the trade. This is something that comes with time. It comes with sitting in mini trades over many months or multiple cycles and understanding the vibes of what's going on. I'm in a Robinhood position currently that was up 100%, still up over 100%. I took 50% off the table. The rest is free money. And I don't even think about it. Ever. It doesn't even cross my mind. It just is what it is. And you need to get to this state of Zen eventually with these positions, thinking about Bitcoin positioning over multiple years or any other coin over multiple cycles. I don't even think about it in my head on a day-to-day basis. It is just out of my consciousness, and that goes back to portfolio allocations, which we'll talk about at the end as well. Just segregating and partitioning and separating. This is what I hold. I do not trade this. Hardware wallets are great for that. This is my active trading position, right? These are the exchanges that I have money on. Sounds basic, sounds silly, but it's very, very helpful in preventing you from over trading when there really isn't anything to do. If you're bullish in Q4 or 2025, what are you doing trading on the 5-minute? It doesn't make any sense. Just buy, hold, figure out how to make more money doing anything else, and wait. Warren Buffett also has a great quote. The stock market is a device for transferring money from the impatient to the patient. Certainly very true. You want to be the Jaguar stalking prey, hungry but not starving, and just waiting. And I don't know why this other quote seems to fit in with this, but medals are won in training, tournaments are just places you pick them up. I don't know who actually said that, but I've heard it pretty frequently. To me, this comes back to things like a system, models, backtesting, practice, waiting for the time to execute. Most people don't really know what they're doing wrong because they're not keeping track of what they're doing. So I've talked about this, trade management, journaling, some of these open trades I had at that time. I've talked about how to lose money in a bull market. I'll put the links for these in the description of the video. A whole separate section on overtrading. People just doing way too much when there's really nothing to do. Very few people that I know are good at trading low caps on a low time frame. Very few people. And if they are, they're trading sizes under $100. They're trading, I don't know, 50x leverage under $100 or something. And if that's what gets you through the lean times and you just feel like you have to do that because you're bored, fine. But whatever you do, I would not size up on any of those silly high leveraged bets. I don't really think I know of anyone over the long term who is still here and has done well and has made a ton of money doing that. You see a lot of it on social media. You see a lot of it on Twitter, people bragging about this, that, and the other thing. That's not how most people make money over time. We'll talk about position sizing, but I've done a separate video on that already. Always good to hit this point home, especially coming from someone like me who just had a wallet drained in the DeFi ecosystem. And that's one reason to use a trusted centralized exchange like Kraken. Before I talk about more ways to sit and wait, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payout Ventures Inc., PBI, DBA, Kraken. So the first thing you absolutely need to know is you don't need to market every order. You don't need to buy just when you feel like it. You can put limit orders on the book. These are orders at a specific price. I hope everybody knows that, but in case you don't, now you do. Now let's say your system says, I like 162 here on Solana. You can put that in the order form here and put it on the book and forget about it. That's one way to do it. Another way you can do this is using more advanced order types like a stop loss market order and a stop loss limit order. Let's say you are looking at this and you like a breakout above 186. We can say a trigger of 184, the limit order at 183, and quantity here. I don't have anything that's not in crypto at the moment, but let's say you did. You could add that to the order book as a breakout trade. One other thing you can do is use alerts liberally on Kraken Pro. Right click anywhere on the chart, set an alert at X price. Let's say we, for whatever reason, wanted a Ripple alert at 70 cents. We could do that. We could set an alert based on a few conditions here, and it gets added to your alert log. You get a push notification if you are connected to the mobile app, and you just wait. You just wait for your pitch. If you like the fastball, you wait for the fastball. If you like the triangle, if you like the head and shoulders, whatever it is, you just wait for that and move on with your life. Do something else. Go read a book. Do anything else, but force yourself to get into a suboptimal position. I talked about using advanced order types on breakouts on a separate video already. I'll link this as well in the description of this video. So when we're talking about using a trading journal and trying to find leaks in your system or what you shouldn't be doing, what your biases are, finding out what you're bad at and eliminating that, definitely need to be recording what you are doing. Here is Jason Shapiro. He's a well-known professional money manager, has his own YouTube channel. He recently did a video talking about his 6-month portfolio review. And one of the things he talks about initially is that he took almost no trades in the first 3 months of the year based on his particular specific system. And then trades started coming later on. For him, that was extremely unusual to wait that amount of time to take trades, but he is reliant on that specific system based on the money he's managing for his clients. So you are your own client, and you can keep track and look at what you're doing whenever you want. Here's some trades I took on GMX over the past couple months, mostly GMX. And you can see most months here, I'm not doing hardly anything at all. Now what you're not seeing on here is the P&L, but the goal obviously is to make several multiples on the winners, well above what you're getting stopped out on the losers or on break-even trades. So your hit rate, I could care less about my hit rate. What I care more about is looking for the setups, swinging at the pitches I like. If I strike out, I strike out. If I miss the ball, if I foul the ball, it is what it is. But when you see something you like and you're in a winning trade, you have to learn to use something like a trailing stop loss. Add to the position. Really focus on that position versus trying to find other stuff. Again, over trading, just looking for other things to do. I've taken virtually no trades over the past couple of months. Just absolutely nothing. March, I took a bunch of trades. Most of those got stopped out. But you really don't have to be doing much of anything most of the time. And that's a secret. Most people think, again, I'm a trader. I got to trade every day. No, that's wrong. You're a trader. You should find some system that works for you, setups that work for you, and focus on that. If it takes, like Shapiro's talking about, if it takes 3 months, most people would go insane, but he knows that this system works for him. I'm almost similar here. I have a couple months where I'm trading a lot and a couple months where I'm doing absolutely nothing, right? So here's my current TradFi side of things, TradFi portfolio. Again, I think it's important to segregate all this stuff, separate it, just so you never have some sort of catastrophic loss if something goes wrong. You're in DeFi, you're on centralized exchanges, you're on multiple centralized exchanges, you're in TradFi, whether that's Fidelity, Schwab, whatever else, hardware wallet, software wallet, whatever you got. So for me right now, most of my positioning is BTC, and then in the BTC positioning, most of that is BITU and BitB with some miners, MSTR and Coin mixed into that. So broadly, I may look at a lot of legacy stuff, get interested every once in a while in some trades there, but most of my positioning is definitely in BTC still. That still feels like the correct and best play to me at this moment in time. There's going to be a time for ETH leverage and Sol leverage. I just think now is not that time for me personally based on the system. And again, if you're confused at like portfolio allocations, here's just an example. Whatever your most appropriate feeling is about BTC versus alt mix. For some people, they're going to be denominated in ETH. They're going to be denominated in Sol. They're going to be in the Sol ecosystem. Fine, whatever. Whatever you do not keep everything you have on a single MetaMask wallet or a Rabby or a Phantom wallet. You definitely want to separate that out. So for me, my HODL wallet is actually decently larger than my trading wallet at this point in time. But just as an example, separate that out. Separate yourself from leverage and spot. Some people, all they love to do is just market long, max long their account on every single position. And that is a quick way to the poorhouse. So if you know you're bad at doing that and you're not disciplined, just put it on a separate exchange in a separate place or put it in a sub account. If you love trading and gambling, which is really what a lot of people love, they don't understand the difference. They really love gambling. That's fine, but bring the size down so you're not blowing yourself up every single time. And there's plenty of exchanges. I like Kraken the most, but there's plenty of other exchanges out there. And I get a lot of questions about lump sum versus DCA, and I would also mix that up. I would mix that up. Some people have a Paycheck Warrior DCA. Fine. Love it. But the last thing you want to do is be the Paycheck Warrior DCAer and then have everything in your leveraged account, and so that you're just blowing yourself up every 2 weeks. Some people do this. I know they do. And there are better ways to go about things. HODL exists for a reason. Most people make most of their money by sitting in winning positions or sitting in positions for an extended period of time. Off leverage, on spot. Not really a secret. That just takes time. It takes a lot of time and a lot of patience. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.